Jessica Hardman. I work for DWS, which is a global asset manager across all sectors, but a large proportion in real estate investing globally. And I have the pleasure of running European portfolio management for real estate, and I'm the UK CEO for all asset classes. Well, our session explored investing in UK and European real estate. And across the whole conference, we've talked a lot about interest rates, inflation, and how they're going to affect the asset class. So we narrowed that down to specifically how that's going to affect European real estate and investors' consideration of coming into that market. And it's kind of a game of two halves. We talked a lot about equity strategies. When is a good vintage? What are the key levers of return that we might be wanting to invest into from 2024 and beyond? And also the growing role of credit and investing in debt, and how that's a really interesting story around minimizing risk but getting returns similar to core real estate equities at the moment. So we unpack some of those features and also what's driving different outlooks for sectors and different countries. As we know, Europe is a mixed picture in terms of all the different countries and regulations. So at DWS, we really like sectors where there is very strong demand and limited structural supply. So that particularly lands in and around residential strategies. So as we know, with rising mortgage rates, less people are able to buy their own homes in those markets where home ownership had been prevalent. And this means that they're going to crowd more into the rental market. But on the other hand, we're not seeing housing development numbers really increasing with political parties really over the last 10 to 20 years. So there's a real shortfall of good quality housing, whether that's in the private rented market or in the single family market, which is individual units. So because of those dynamics, we think there's a really good opportunity for us to invest in affordable homes to grow that sector, but also deliver strong income return on behalf of the investors as well. Secondly, we really like urban logistics. So urban logistics has really grown in a demand set driven by retail, consumer, online businesses. Those wanting to deliver in the last mile or in the 24-hour window need to be centered around dense demographic locations like London, Paris, Berlin, etc. Again, there's a shortage of land. And with, again, the high interest rate environment, that's curtailing developers to be able to produce more supply. So we think those dynamics would play very well into medium-term strategies. And thirdly, we do like credit. So we think credit has a really good role within a multi-alternatives portfolio, whether that's real estate credit strategies, infrastructure, or in direct lending in corporate businesses. We think that's a great extra return to get alongside our equity strategies. Yeah, for sure, the industry is being now reshaped because of high interest rate environment. And so real estate needs to fight that little bit harder to be able to get investors to allocate to it, because the fixed income markets are producing a very nice income return for very little risk. And so we're seeing prices be recut, so falling prices within the real estate market. We think that will bottom out during next year when we see interest rates and inflation start to stabilize. But for sure, it needs to offer more return. It's very akin to when I started my career in the early 2000s. We were then having interest rates of 4 or 5%. So actually we're going back to that era, and it's something that we have done before as an industry, and I think we will continue to find our ground within that. The final thing is around ESG. So there is a lot of regulation around ESG within Europe. Europe's the most progressive, I would say, as a region for that matter. So funding the transition of brown buildings to green buildings is going to be something that we need to price into our market going over the next 20 to 30 years, and that's something that we're thinking very carefully about.